Okay, let's unpack this. You probably just brewed a cup of coffee, right? Well, that everyday staple, it has some surprising, often pretty dramatic market swings. Today, we're doing a deep dive into a recent jolt in coffee prices, and trust me, it's a lot more than just simple supply and demand.
That's absolutely right. Our mission today is really to pull back the curtain on the global coffee market. We're zeroing in on the intense events of July 23rd, 2025. We're using insights from a report, Coffee Market Resurgence, Frost Concerns, and Price Dynamics. The idea is to give you a clear picture of the forces driving these prices from, immediate weather scares to complex global trade stuff. So you feel really informed, but without drowning in data.
And July 23rd was quite a day for coffee, wasn't it? Prices jumped significantly. Like domestically in Vietnam, the average price shot up over 3,000 VND per kilo. Globally, too, the gains were dramatic. Robusta in London, up over $100 a ton, and Arabica in New York climbed more than 4 US cents a pound. These aren't tiny fluctuations, they're pretty substantial shifts. So what exactly kicked off this sudden surge?
The main catalyst, almost certainly, was growing worry about frost in Brazil. Meteorologists, specifically Climate Tempo, they forecasted a cold air mass moving through key Brazilian coffee areas, and that brought a very real risk of frost damage. This forecast had such an impact that Bartart noted these fears basically wiped out earlier price drops and led to that strong finish for the day. It's also maybe worth noting Brazil's biggest coffee co-op, Cusute. They reported their harvest was about 59% done by mid-July. That's actually slower than last year when they were closer to 67, almost 68% done by the same time.
Okay, so frost fears in Brazil, a slightly slower harvest pace. Those are big triggers. But as we often find, the coffee market is rarely just about one single thing. What other factors, maybe even contradictory ones, were also in the mix here?
That's a great point because this market is, well, it's a complex, definitely. For Robusta, for instance, we saw what's called short covering pressure. Basically, think of traders who bet on prices going down. They held short positions. When prices suddenly rose because of the frost scare, they got caught. So to cut their losses, they had to quickly buy contracts back, which kind of ironically pushes prices up even more. And this happened even while Robusta inventories that ICE monitors actually climbed to an 11.5-month high.
Wow, okay, so higher inventories usually mean lower prices, but the short covering pushed them up instead.
Exactly. It's a fascinating case where, market psychology sort of overrode the basic supply signals, at least in the short term. Meanwhile, for Arabica, the inventory situation was the opposite. Stocks actually fell to a 3-month low.
Hmm. That really does create a sort of tug of war for where prices should go. So beyond these immediate market pressures and the inventory quirks, what about the bigger picture, like